Now we have an example of Twitter on the daily time frame and looking at May through August of 2016 on the daily time frame. What we're looking at here is the upper Bollinger Band, and even though Twitter has been in an uptrend during this time, there are still plenty of signals where we can be looking for either bearish day trades or just short-term bearish trades, because we are fighting the trend in the sense that the daily trend has higher lows and higher highs. But look at this upper Bollinger Band and the way that the price reacts to it. Even when we close above it, we're seeing big upper wicks of profit taking. So the bulls see a big clear break above the upper Bollinger Band, and then by the end of the day, we see profit taking. And look how many rejections we have. High of the day, 1, 2, 3, 4 days in a row rejecting from the upper Bollinger Band. Here's a day where we got above it and closed above it, but again, big upper wick of profit taking. The next day, 1, 2, 3, 4 rejections. We closed above it one day. That was a very strong candlestick. No follow through above the upper Bollinger Band. Here's another half dozen rejections, upper wicks, getting above the upper Bollinger Band, but unable to close above it. So the point being, using the upper Bollinger Band, if you're watching the previous history of this stock and you see that it has struggled to close above the upper Bollinger Band by the end of the day, time and time again, you're a lot more comfortable taking a bearish day trade if you see that we are currently above that upper Bollinger Band and you're getting other signals on shorter term time frames. If you see the 5-minute chart make a clear break of the higher low, higher high pattern, and you notice, oh, we're up above the upper Bollinger Band, and we have been unable to close above that over the past 4 days. So I know the odds are more likely than not that we do see further downside because the bulls have struggled at this level in the past. So for all of these examples, it's really important to be looking back at previous history. You can find a stock, and if it hasn't tested its 200-day moving average resistance in a while, it might have no problem getting right over that resistance level. But if you look at a stock like we just looked at Tesla, and if you look at a stock that shows a clear rejection from a resistance level or a specific moving average time and time again, that greatly increases the odds that it will reject and repeat what history has already shown us. So seeing something play out in the past time and time again and anticipating that it will play out again and tilt the odds in your favor for a trade, whether it be bullish or bearish. So always be looking at what has occurred in the past to determine what you can expect to occur in the future.